Welcome to the Hamsey Analytics Daily Market Commentary. I'm Pablo Navarro. Today is Friday, September 28, 2012. For the market internals, the New York Stock Exchange advanced decline differential closed at negative 634. Nasdaq advanced decline differential closed at negative 765. We had 5 new 52-week highs for the S&P 500 and no new 52-week lows for the S&P 500 today. For the volatility, 514,000 contracts traded on the VIX today, with 69 million in total premiums paid. For the dollar-weighted put-call ratio in October, a 0.54 reading with 21% of total premiums paid, which is neutral. On November, a 0.13, which is bearish, with 40% of the total premiums paid. December, a 5.83, which is very bullish, with 15% of the total premiums paid. And in January, a 0.62, which is a neutral reading with 20% of the total premiums paid. Here we have the daily chart for SPX. We are down 6.5 for the day, 0.45%, and we did close basically at Zero Sigma. Zero Sigma was 1441.6, so we closed below for the day, and we continue to see here lower prices as time goes by. Since the day we made a high for the year, this close below 0.6 was not the most positive thing here for an uptrend continuing from here. We wanted to close above it, and we did not. So from here, the targets, we're looking for 1422 and then 1400 on the downside. That's going to be pretty important here. On the weekly chart, here we have the weekly chart. We have this trend line we talked about every week, and we are still above it. So on a longer time frame, we can still say that we have positive upside trend, higher highs, higher lows. Our target is 1481. That's going to be our first target here for the longer term. We want to hold this and respect this target. This is going to be around 1445 next week, 1446. So very important level here to hold. Another important thing to mention on the weekly chart, we are red and the CI starting to turn lower, which is not good. We want it to remain with a positive slope and continue to go higher. So our red CI, which is our warning sign, and CI diff starting to go lower, not very positive for the uptrend here on the market on SPX. Now let's go for IWM. Here we have the daily IWM chart at 83.44, and the low today was 83.26. Very important here on this chart, especially we wanted to hold the lows for the week, and we did, which was good. We wanted to hold here. We want to maybe another test of that 82.80, 82.70 next week, and then start to go higher. This chart, you can see CI now white and negative, which is not positive for the upside, but still on the target. I'm looking for 82.80, 82.60 as our next support. If we hold this level, we may be looking for higher prices, maybe come and test this 85.60, 87 target. Those are gonna be, if we do fail this 82.5, 82.80 support, we're looking for 81 and possibly a test of the 200-day moving average, which is around 79.60. That's gonna be very important here on the IWM, which is the risk on risk off index, the Russell 2000 ETF. For the weekly chart, we have a red week, of course, and CI was red. We talked about we're starting to see CI turn lower. We do not want that. Maybe next week start to go back higher again. We want to hold this positive 1, positive 2 sigma channel on the weekly, and our next target on this would be 86.32. That's gonna be our next target if we hold this level. If not, we're going probably to 0.6, which is in line with the 200-day moving average on the daily chart we just talked about. This is very important here to hold, maybe a pullback here and try then to go higher. But The best scenario for the upside would be the first one we talked about, holding this 8260 level. For the Nasdaq ETF, here we have the Qs, and we're gonna start with the daily chart today. Down 0.9%, almost 1% for the day. Really bad but important. We did not take the lows of the week. We're starting to see here it still continues to go higher, not as much as we wanted. We wanted to go above 0 sig. We failed there today, so not positive here. Our downside targets 6750 and 66. Maybe if we get some bad news, go to this 200-day moving average. Pretty far so far, but still something to keep in mind. We want next week at the beginning to start turnaround fast and go maybe try to test the highs of the year. But again, this 0.66922 is gonna be our resistance on the upside. We need to break that and close above it. Let's go to the weekly chart for the Qs, and here we have, for the weekly chart, we continue to be on the +1, +2 sigma channel, which is going higher. We want this to hold. We've been here for a couple of weeks now. 1, 2, 3, 4, 5, 6, 7, and now 8. We do not want to break this channel, and if this is so, we're looking next week maybe for 71.50, 72 as it goes higher next week. Important levels here to watch as time goes by. CI red, which is warning sign, and starting now to go lower. Not positive at all on CI and CI diff. GLD, here we have the, let's start here with the daily chart. Again, good momentum to the upside on GLD. We were down 0.3% for the day, not much happening, but we talked about here coming down to the 0 sig and bouncing. We need to give it here some more time. Our targets on the upside are 175 and then 177. Those are the targets we're looking here on the daily chart. If we go for the weekly chart, here we have a good week. We have a hammer on the week. Very bullish pattern here. You could see here, since we broke 0 sig on the weekly chart, we have gone straight up. And here we have a very nice candlestick, which should say that prices will continue to the upside. That would be the bias here, and maybe looking for 178, 179 as our longer term target. On the downside, we do not want to break this 165 level, which is 1 sigma. Those are going to be the levels to watch. And here we have again a red CI, but you can see the difference in slope. Very positive slope here as we continue our way higher on gold. On VIX, for VIX we're gonna start with the weekly chart, and let's see, we have here a closing below 0 sig. Another week we cannot break 0 sig to the upside, and it has been acting as resistance several times. You can see here since the break here, there has not been a week that we are able to close above this level. That does not mind, maybe come and test it a couple of times and then come back lower as the market rallies. In case we see a break of this to the upside, that would be somewhat of a warning sign. Still, we do not have it, so we still bearish here on the VIX, which implies positive for equities. We have a special offer by TradeStation. Get your Hamstay Analytics proprietary indicators paid by TradeStation. Contact Active Traders office in Chicago, Peter Albino, at the number listed below. Have a great week, and I'll talk to you tomorrow, Monday.